This week, here on our free preview on YouTube, join us as we take a look at the U.S. economy and how it is soaring against its rivals. For now, sit back, relax, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lindsay.
How are you?
I'm great. How about you?
I'm great. Thank you. How was your weekend?
You know, it's finally feeling like Christmas. I know we're into mid-December here, but there are Christmas parades happening. We finally got a little bit of snow.
The most beautiful dusting.
It was perfect. Not too much that the roads were a mess, but just enough to make it feel wintry. So doing all the Christmas tree and decorating stuff, it's fun. I love this season.
Did you get your Christmas tree over the weekend?
Yes, finally. I feel like we always go the day after Thanksgiving.
Same.
We were late this year.
Yes, I
don't know what it was.
It's throwing me off completely.
Yeah.
I feel like all the decor hasn't been out. I don't really have like a full vision for the new space yet. But we too got our Christmas tree, and the biggest one that my kids and I have ever had.
Oh, wow.
We have a very big, you've been there, the big open foyer space.
Oh, so that's where you put it?
Yeah, we were able to go like 9 feet this year.
I love that.
Yes, which is good because I'm a huge lover of ornaments, which you know.
Yes.
So I finally have a tree that can handle
you
them
have
all.
The canvas for all of your.
I know.
I love it.
So fun. And I will admit, I am that mom that allows the kids to decorate and then redecorates it all and moves all the ornaments around when they go to bed. So yeah.
Well, my toddler is just now old enough to kind of hang things on the tree, so we're decorated about up to here.
I was going to say,
tree,
I remember that the whole
pretty
bottom.
Blank, but it's cute. It makes her happy, so I'm all here for it.
Right. I know this is the most fun time of year with kids,
really is.
For sure. I know that we both went to parades over the weekend, which I didn't know until I moved to my new town that these Christmas parades were a thing, but they're so much fun, and
it's awesome.
Arguably, I think better than the 4th of July parades that I've been used to. I think Christmas is a really fun one.
I think so too.
Yeah, just so pretty.
Yeah, and when you're huddled out there with the hot chocolate or whatnot, it's just cozy. It's nice.
It's freezing. Let's be honest.
It's actually really cold.
That's the most miserable part of it all.
But anyway,
yeah, exactly. Well, environment to productivity across the United States economy. This next article is titled, Why America's Economy is Soaring Ahead of Its Rivals. And in summary, the article attempts to explain why the U.S. is growing so much faster than any other advanced economy. Yeah. And the article says that it's largely in part to venture capital investment and R&D spending that happens here in the United States.
Yes, I thought that was so interesting. And we do know that there is, this is a time to be investing in America. We have seen this. We at ITR have been talking about this way before the pandemic, how America is a good place to do business. And the foreign direct investment flows really reflect that, right? We've seen a lot of interest in re-onshoring. We've seen a lot of interest in just, like I said, the FDI. This data that I have says year to date in 2024, the U.S. has attracted 14.6% of global greenfield foreign direct investment. So people want to be here and want to be doing business here, which begs the question, why?
Yeah, true. Because, you kind of think about where we go across the globe to get different materials and things like that, but is the brain power of the global economy sitting here in the United States?
It's a good place to be.
I guess so.
Yes, and so, we do bring...
Right. People come from their own countries with their brilliant minds to the United States to make a difference.
Yeah.
And I think the article kind of goes through some ideas as to why that might be.
Yes, definitely.
But just how much faster is the U.S. economy growing in comparison? Let's set the stage that way.
So since 2019, U.S. GDP has grown 11.4%. That is about 3 times the level of Europe. And just for comparison, the UK and Japan over that time, their GDP only rose about 3%.
Wow.
So we are well out ahead. The basic premise of this article is very true, that we have just been growing at a much faster pace.
Okay.
Now, still slower than a lot of Asian economies. We think of China, they do just tend to grow much faster. China especially, if you compare their current growth rate, it is faster than the US and Europe, but it's a lot slower than they had been growing a decade or two ago. So everything is relative there. But again, if you think of kind of the developing to developed scales of economies, if you're looking at, major developed global players,
Right.
the U.S. is absolutely out ahead.
Okay. But I think about, you benchmarked 2019 and those numbers, and there's been a couple major black swan events across the globe.
Very much.
So we have the COVID-19 pandemic, obviously, and then there's the war in Ukraine that hit a lot of these other large economies. So is our growth attributed just to the fact that, I guess the question is, did we just recover faster? Were we hit less hard than other advanced economies? Or is our growth attributed to something different, like the article is suggesting with the R&D and the venture capital?
So we definitely got a leg up because we did not have a war, happening on our shores. Ukraine absolutely limited some activity, economic activity in Europe. Now, we also had the kind of consumer-focused benefit that our government did a lot more stimulus direct to the consumer than other governments did. Now, that's going to hit our fiscal position. That's beside the point, but our consumer really did benefit from that. And with the consumer contributing about 2/3 of GDP, that is a hefty lift. But even beyond those factors, and as you said, those black swan events that really did contribute, if you go back further, since the Great Recession of 2008, 2009, our labor productivity sector-wide is up about 30%. That's 3 times the growth rate of Europe and the UK. So we really have been, not in every sector, so total factor productivity. In 2023, it was up in 12 of the 21 major sectors that this study looked at. That was led by things like mining and retail trade, where we're getting some benefit from AI, some benefit from those. I know, isn't that fascinating? Mining. But it was down in things like manufacturing. So manufacturing just already had a lot of its gains. That productivity, especially labor productivity, isn't seeing as rapid rise. But if you're talking AI, if you're talking robotics, this is a really good place to be doing that. We have the best and brightest. We have some leading technology. Not to say that no research is going on elsewhere, but a lot of it is centered. If you talk tech, you're probably throwing Silicon Valley in just as a, in the lexicon. That is a real region in the United States. There's no, we don't really talk about like the Silicon Valley of Europe. And if you did, you probably phrased it that way to put it in the context of Silicon Valley.
Right. Yeah. It's kind of like the benchmark.
It is. It absolutely is. So that's why we see so much of this growth happening here. We just tend to be leading in the sectors that are growing right now, which is tech, which is AI.
Okay. So the economy as a whole was a hot topic for the election, which I'm sure it always is.
Yeah.
But, there was a lot of campaign rhetoric around the economy, obviously. And one of the quotes from this article is, Donald Trump will inherit a booming U.S. economy when he enters the White House in January. Some economists question whether the policies he has indicated he will pursue, which are tariffs on U.S. imports, mass deportation of immigrants, and big tax cuts for the wealthy, might undermine the long-term advantages the U.S. currently boasts and risk a return to resurgent inflation and keep interest rates elevated. So pretty heavy quote there from the article.
Yeah.
And I'm going to ask a really basic question to just let you fly. What do you think about all that?
Yeah. Again, you know that we are apolitical.
Yes.
I'm not going to take a good or bad stance on any of those policies, but I will say they do tend to run inflationary. So this argument that tariffs, mass deportations, we had a whole show a few weeks ago on this to say what that impact could be. It would be inflationary. If we're putting tariffs on goods, that means goods inflation coming up. If we're deporting however many million immigrants, that would be inflationary for wages. So both sides of the equation, yes, that would absolutely cause higher inflation. We've seen the Federal Reserve really does not want inflation to come surging back. So to say that that would limit the number of interest rate cuts they can do, I think is a very well-founded statement.
Okay.
Now, as to Trump inheriting a strong economy, I think that's true, right? We have been talking for years. This year was a little bit flatter, even down in some sectors, but I think of it more as a plateau. It wasn't an outright collapse. This was not a major contraction across most sectors, even GDP. No contraction, just a little slower slower growth.
Yeah.
So we had been expecting 2025 to be a good growth year. Those fundamental factors, those leading indicators, they are very clearly pointing to rise. And it would be hard for any one individual, even if they're coming into the Oval Office, to really bump the ship off course at this point for 2025. So our forecast is for GDP growth of 2.5% in 2025 and for the industrial economy to expand 1.4% next year. So yes, whoever was elected, I would expect that 2.5% GDP growth, 1.4% industrial production growth. If you want to come down to costs, will they be higher? Will inflation be higher by year-end 2025? I think it was due to be higher anyway. So tariffs are really just stacking on top of where we already saw inflation coming back.
Right. So I think that that's really important to put the emphasis on. If you've been listening to us, we have been talking about a return on inflation come mid-2025. It also being growth for the remainder of the decade.
Yes.
And I think no matter what side of the aisle you sit on, there are going to be skeptics on either side. Some people will say he grew the economy in 2025, even in just the last 6 months. Look at all he's done.
Exactly.
That was already planned for.
A lot of this we had been expecting. Right. So we really don't play political favorites here at ITR because we just don't find that the economy has a favorite political party. To me, it always comes back to, if the economy doesn't have a favorite, how can I tell you that I have a favorite party that you should vote this way? I find that really the big difference is politically, it's social issues right now. Like, it's not economic. And so it was killing me this whole election cycle to say, so-and-so is the president for the economy. And because I'm voting for the economy, I'm voting this way.
Right. That just wasn't the case.
Our data just doesn't back that up.
I'll end with this quote. Economists polled by Consensus Economics expect growth of 1.9% next year in the U.S., the fastest pace of any G7 economy. Looking 10 years ahead, they will still forecast the fastest growth.
Oof.
So I hear this knowing that ITR Economics is forecasting for a 2030s depression. Not recession, depression. So I think, how can both be true? I don't know if they can. Fastest growth and a depression on the horizon.
Yes. So clearly this group of economists does not have that depression forecast in their sights. I agree. In the rest of this decade, right up until that 2030 or so fall off, I think we will outperform these major rivals.
The roaring 20s. We've been talking about that.
Yeah. So we expect even higher GDP growth. Again, I said 2.5% GDP growth next year. This is a good time to do business in the United States. And so I don't want to scare anyone into just hiding out the rest of the 20s. I do think this is a great growth time, a great time to be investing in America. This is really where the opportunities lie. Now, at the end of the decade, 29 or 30, that's where we are probably going to fall first. Again, it comes down to, and we've brought this up a few times on this show, to our just terrible fiscal position from our government. If we can't roll over our debt, if we run into trouble there, that is going to trigger a major economic event. I do think this is going to be a global event. So we won't be the only one. I don't know relatively if we'll outperform or underperform, but we'll drag everyone down with us.
Right.
So bad for everyone at that time. Clearly, this is not on their horizon. Right. But if you're prepared for it, maybe you can outperform whoever is the relative winner.
Well, exactly. To quote Brian and Alton, is there prosperity in the age of decline? And that is what I don't know. What are we going to do after the 2030s? I feel like we have been, it's probably because we're such a young company right now.
Yeah.
I feel like our whole life here has been talking about this depression and preparing people.
It has been.
And kind of ringing the alarm, prepare, get yourself in a good cash position.
Exactly.
All of these bits of management advice that we give every single day are to get you up into and through. That's why we have programs like the financial resilience where Brian stress tests your business.
And you get a 15-year forecast for that. That takes you through the depression, which is so cool.
Exactly. Leading up to and through the depression. He looks at your business. He stress tests it. He meets with you for 90 minutes. And it is just, the testimonials that we are getting on this program.
Oh, it's fantastic.
It's just been so fantastic. And really arming people with the guidance that they need to prepare now, which
Yes.
is the whole point of forecasting, right?
Exactly. Well, we've had
Get
this
ahead of it.
forecast in place for more than probably closer to 15 years now.
Yeah.
It has been coming, and now we're like getting closer and closer and saying, oh my goodness, 2030 is on our doorstep.
Right.
Everything that we, and me especially as one of our speakers here at ITR who's been out on the road talking about this, has been prepare. And again, make hay while the sun shines. Enjoy the rest of the decade. Prepare yourself leading up to this event. What I'm personally really excited about is this upcoming webinar. What is it, in 2 weeks, I think?
Yeah, December 17th.
Okay.
It is called, hold on, I have it written down here so I don't say it wrong. It is, most importantly, the last executive series webinar with Brian and
both
Alan.
Brian and Alan.
I can't believe we have come to this place.
End of an age.
It is the end of an era. Navigating the financial eddies of 2030s. It is December 17th.
Okay.
It is at 2:30 p.m. Eastern.
Yep.
And it is 2 hours long, which is also
Yikes.
a very long webinar.
It is.
Which just tells you it's going to be jam-packed.
Oh, I'm so excited.
And from my understanding, they're kind of starting in 2028. They're going to take you through to the end of the 2030s. They're going to talk about personal finance. They're going to talk about managing through your business and all these different strategies to get yourself in that prepared place that we've been talking about.
Well, what I'm really, I think, most excited about is not the preparation, which we've been talking about a fair amount. Again, I think they'll do a great job of outlining that in very clear language. But this webinar is also going through the low, which is really, we've just been getting to the decline and how do you kind of prep yourself to ride out the downside.
Yeah.
This is really going to focus on what are those new opportunities. If you can really get into the market in that 2036-ish low point, how do you come out on top on the other side of this? And man, what an opportunity that is.
Right.
I'm excited for this one. I can't wait.
It's been a long, long time since there's been a business cycle like this, and I don't know how many have actually lived through it. So
probably very few at this point. Life expectancy, you said, was the lowest in the U.S. So.
Exactly. So between the webinar, between the summit coming up in March to talk about
very
policies,
excited for
that's
that.
an exciting one.
Yeah.
And this financial resilience program that Brian is offering while he is still here at ITR, just the brain power that he is giving to these clients. And it's just been really, really cool to watch. And what I can't wait personally is to still be sitting here talking about the success stories that we've heard from clients on the other side.
That's going to be amazing. I still love the 2007
I
success
love
stories.
those. They're my favorite.
Oh, they're so great. We're going to get a doozy, I think, of them in 2036.
I know. And we have so much more AI so that we can record it better.
There we go. Yes.
And we will be having those testimonials out and about, I am sure.
Oh, that's going to be fun.
So tune in for a decade or so.
Right, exactly. Well, tune into the webinar, make those gains, and you can be giving us our testimonial in 2036.
Exactly. But for our articles, for our show, that is all the time that we have for today. Thank you, as always, for sharing your expertise with us and helping us navigate these ups and downs.
Yes.
And thank you all for tuning in with us and hanging out while we take you through the numbers. Until next time, bye, Lauren.
Bye, Lindsay.